I see indexes down, S&P 60 points, the first thing I'm going to lean to is there an opportunity to get long, right? Because shorting in the hole this far down, even though we have seen the market break and we're kind of in this new volatility regime, we have been in the heart of a bull market. So, the 100 handles that we gained yesterday was not nothing. Looks like that 50% retracement is going to end up being the point of failure. Again, with a gap down, we got the futures down about 60 handles. So we're going to be testing the big double O, just like you're throwing that bowling ball off of a building and landing down into the trampoline below, right? I like that analogy because, bowling ball is going to generate a good deal of velocity. When you open with a gap, like what we're about to see, you can bet that it's going to test that bound, right? So we closed at 54. If we're down 60 handles, we're going to be pushing down below that area as support. I still think it's kind of where we want to lean. And then I'm also going to drop a horizontal there, cancel the left extension, and then this creates the band, right? So between the gap fill, between that key gamma strike, this is the area that I want to be watching for support this morning. And I just don't know, I think this is how trading, you kind of just let go of what your assumption is going to be and say, look, that is what I believe will be a good zone. And then I try to let price tell me if I'm right or not. How do we try to let price speak? Well, one of my favorite ways to do it is through the trailing ATR. Now, looking at this overnight, I don't really pay it a lot of mind. One, because I'm not trading the overnight session. And two, because it tends to be a little bit more noisy. But what this would look like is you let this open up, let it get down there and test that zone in cash. And that's why I use the two different products, right? Because you might say, well, why aren't you going to use the trailing ATR on the product you're trading, like SPX? Well, because that indicator is going to have a very significant gap this morning, and that will throw it off for about the first 30 minutes of the day. Once you get through that first opening 30 minutes, then you have adjusted for the cash session to that point, and the indicator can be more helpful. But, to mitigate the problems of the gap, we just come over here and check it out in futures, and that'll be one way that I look to trigger against that this morning. If I am going to trigger against it, it's probably going to be something like the in-the-money put credit spread. Now, early in the day, there is always the argument to be made for a variety of strategies, right? Because if you're just buying a call and you do get the bounce, the call will pay off much more quickly, as opposed to where if you do a butterfly, you kind of have to wait until the end of the day. If you do a vertical, you'll still need the direction to go in your favor, but the passage of time is also an ally. So we'll kind of look at that. That's everything I'm thinking about here initially for the 0-day opportunity. But we'll keep that about arm's distance, like I said, because I want to look for, 30, 40 handle point bounce. I think there's at least one version of reality where that is what happens today. But I don't want to force it if that daily chart of the VIX really needs to get going, right? Remember that chart had a big squeeze in play. So just want to be mindful of all of that as we start getting our ducks in a row this morning. So that's a little bit of what I'm looking at. Let's see. Good deal, Steve. I hope you have a good one. But just rolling up the punches here a little bit, I saw that AMD had a bid this morning. I don't know that I find myself in much of a contrarian mindset, but when I see it just under 220, I've got to think that that's going to be an important area of resistance. I've been mostly looking for an opportunity to get in for the next continuation trade in that one, but it may take a little bit longer. For Ethereum, we covered this yesterday through the idea of selling some naked puts in ETHA. I'm going to modify that idea just a little bit this morning. I still want to look at the idea of selling premium, but I feel like doing it through the unbalanced fly is just going to be a little bit more forgiving. It's also going to be more accommodating for smaller account sizes. I also think that this is a place where we can look at it because ETHA has pretty decent liquidity. I came to this conversation with the topic of selling a naked put because in some of the other Ethereum ETF products, they're so thin that what you do is you just trade them smaller, but you go fishing out there with the sales of naked puts, and a lot of times you can get good fills. Now, of course, there's a lot of more risk involved with that. You've got the margin requirements, etc. So what I've done is just canceled that order for the sale of the naked put, and I'm going to go fishing for some unbalanced flies. This also makes it so much easier to define your risk, because if I'm looking at doing these $3 wide, and let's say you take one in at a 50-cent credit, well, then you know the worst that can happen is a loss of 250 bucks. Well, if 250 bucks is your max loss on a one lot, well, then you could take four of them, be on the, on the risk for $1,000. And then you can sit here and tolerate the volatility of the product so much easier, rather than selling the put naked at 30 and then this thing has to test 25. That would not be the easiest place to be. So again, you can see my little flags here where I've got this order set to be working at the open. So we'll give it just a few minutes to trade here, see if it gets anywhere close to what I'm trying to get filled at. The other thing you can do with this is when you've got those orders working like that, once, now that the market is open, you can see kind of the thing here where the at the money puts are 60 by 220. So they're going to widen out, and you have to give the market a minute or two to allow the prices to come in. This is how you're going fishing with these, trying to get a good price on those wide spreads. Now, being a multi-leg spread and a more complex one, right, it's going to be a little tougher to get filled, and it's really not going for a very good credit. I mean, I still think that this is worth pursuing. So I'm going to get one working at a 15-cent credit, trying to see if this lower anchor is going to be our area of support. Very simple chart, and by no means a holy grail, but at least you can see what was very helpful back in through here. And you get that little more volatile flush that was kind of the crypto crash of this October. And then on the recovery, if that level is going to continue to be of any help, this is where it needs to hold. Now, if you don't love that analysis based off of the volume anchor, that's fine. I'm going to look at ETHA and give you a reason to consider it further. But do remember that the easier buy, one way that this logic is taught, is that it's going to be easier to confirm that this lower one is support once the upper one is recovered, right? I'm stepping in on this telling you, yeah, okay, I know that might be a touch early based off it being easier above 4,400. But then I'm taking it and looking at this through ETHA and telling you that 30 is the strike, right? So this is more of why in these more liquid products, I'm willing to look at things like, these big round numbers, because there's a liquidity there that will tend to drive them. And we see we've got the key gamma strike right there. The put wall is actually 28. That might be one more reason to just be a little bit careful with that idea. But again, I covered it with you yesterday. I wanted to follow up on it today. And that's just a quick review of a position that I have out there working this morning. As far as coming back to check on the S&Ps, give them just a few minutes to let the dust of the overnight settle. We're down a full 66 handles. You can see that bowling ball has been dropped, and it's piercing that zone a pretty good deal. But, just kind of all I can do in these morning sessions is show you what I'm willing to do with my own money. And I'm looking for a spot to go long in here. It might take a couple more minutes before I get the clarity that I would like to see in those technical signals. Obviously, open up down here at 65.90. You think, man, would you get all the way back to 50 for a butterfly, or would it be something more like a in the money vertical that targets the snow line? Right now, I'm thinking more something like the sale of the 66.30 put would be the trade that I would look at. So let's just price this out real quick. Again, keeping an eye on the ticks. Going to update my trace value so I can keep an eye on the short duration option flows. See if there's anything worth commenting on that as we get through this morning together. But let's give ourselves a few more strikes, and we can now look here at that 66.30, right? I come up with this strike purely off of looking at what's my target. And, voodoo lines make for a great way to just pick one out. And if we get a meaningful bounce, I think that'll be the magnet that we're focused on. As we think about that, you can see right now there's been nothing in the way of setting up those buys just yet. I mean, it could be a walk down day. The ticks are opening up at negative 1,000. We'll need to give them at least 10 or 15 minutes, and that'll paint more of an accurate picture of the morning. A lot of times I think days like today can be easier to trade into the final hour, because whereas right now I'm trying to read into a couple minutes of tick data and these opening reads into the afternoon, you'll see all the history of the day, and that can help paint a little bit better picture. So between advanced decline at negative 1500, ticks at negative 1000, all of these are showing us a bearish open. It's just how far do they keep pushing this thing? If they push it another 30 handles to the downside, I hate having to just watch those moves. But at the same time, it's just always been a tough lesson for me on buying puts on stuff like this. For every one time it works, I feel like there's going to be 10 that, you're buying it right here, paying a pretty price for it. And then, 3, 10 minutes later, maybe it takes a couple of hours, but then there is the rebound. And that's more what I'm going to try to be patient for. So that's just how it's going for me this morning. Put call ratio is still only at zero point 0.6. That's another big thing to make note of, that when you look at action in the S&P, it's kind of bearish, or it looks slippery, something that could continue to sell off, and the put call ratio is only at 0.6, it's probably going to continue to sell off. You have to have selling that drives that ratio at least to 0.8. You've got to be able to adapt to the environment, because that reading is not always going to be the same for every environment. But I would say, it's not going to get to 1.0, or it hasn't in a long time, but it still needs to get above 0.6 if you're going to see any kind of real fear in the markets. That fear is what helps us put in more meaningful bottoms. And right now, it is just not out there. So let's go through a few more. I am still looking for opportunities to add to bullish positions, but it's just, do I do it today, or do I get to give it a couple more sessions to really try and find, ideally the fast money portion of it, the part where we're not having to take a lot of heat, and we can get in ideally as these signals start to resolve. In Google right now, we are still a little bit early, right? So squeeze is technically still moving from upper left to lower right. The original version of the squeeze would show you a bearish signal, right? Because those red dots make their transition as the histogram is dropping. So, I don't want to ignore that, but I also want to point out what I believe will be a slingshot kind of version of the squeeze, because this is the prevailing trend. So, it could get a little messy to the downside, especially if the S&Ps want to have a bigger drop. But I think Friday was the real, that's where Google really took a shot. As long as we can stay above that swing low, I'm going to be willing to give it a little bit of time. As far as Tesla is concerned, another, just wildly volatile down here, and down 14, almost $15 today. We can look to defend this tree line. If you're looking for a fresh setup, I think this would be a spot to do it. Given the recovery that you saw on Monday, I really thought this thing had made up some good ground. It gaps above the tree line, pushes through 425, and then recovers the snow line at 433 to end the day. That is all a very constructive piece of a voodoo roadmap. All the same, you get hit with that additional tariff news overnight, and your technicals just matter less. I guess that's part of just being honest with you. And it's like, you can have the best technical studies in the world, but when you've got headlines like that are just kind of throwing a wrench in patterns, it's just more of a bearish environment. And Tesla is right on the forefront of that. So looks like I did get my Ethereum spread at 15 cents. Like I said, I know those may seem kind of like very small credits, but remember that there's a huge difference in a strategy like that versus the sale of a naked put, or so many things. You sell the naked put and it goes all over the place and winds up at 30 at expiration. You're like, whew, all right, I took in the credit, barely. If it bounces around and closes at 30 for our expiration, we'll make $3, right? So it's just very different, almost more just plainly neutral rather than being bullish. But if it does decide to bounce, we have no risks to the upside. So I'm going to take a fill on that this morning as the rest of this just continues to cascade lower. Do we have to set up for another 100-point down day? We're down now 86 handles, flushing that first zone I gave you with some velocity, right? Getting that far below, I then just have to start quoting the area underneath that. I can almost duplicate that little rectangle and just move it down to what is basically 65 to 50. And I would prefer to be able to give you a more narrow range, right? 15 points is kind of wide, but that's a mogul that's right there at 65. Of course, 50 is just going to be the next big gamma strike. And these are the spots where the bounds are being tested, again, with some velocity, with increased volatility. But all I can do in these spots is say, like, look, this is what I'm doing with my own cash. If you want to come in here and try and get short this stuff, I just think you got to keep a short leash on it. You can't short this in futures and walk away. I think you'd be asking for it and you would look at it in the next couple of hours and think, ooh, that's a little painful. Now, again, that's just my idea right here. I'm going to keep updating and working with it as we get through our hour together. But notice futures. Futures tag the overnight low to the tick. Got this on a 3-minute. Let's bring it down into a 1, because if you're not living on a 1-minute chart, what are you doing? A little bit of levity for this morning's analysis, but you'll notice the 1 minute with all of those dots, that shows us increased volume. This is another thing you can watch for to see if the selling is going to subside. You may get a little bit more clarity out of something like a 2-minute chart, but that's just kind of what I'm watching for this morning to say if it is going to ease up, we should see it here. We should see it in a shift of the ATR trailing stop. And these are kind of the spots to be watching for it. Now, I like trading through SPX. We covered a couple ideas there. We can also take a look at SPY to keep things a little bit smaller, a little bit more accessible. I want to have these ideas priced out and ready. They may not come to fruition, right? So it's like talking about it, being ready for it if it presents itself. But if all of this stays weak, again, I'm not going to short it this far in the hole. And if the buying opportunity does not present itself, I don't want to force it. When we look at SPY, this is another place where early in the day like this, the unbalanced butterfly is tough to look at. Could it still work? You bet. But it's going to sit here and do nothing for the better part of however long it takes. What it is a bet on is that SPY does not break under 655. And you can do that $3 wide for a 50-cent credit. And this is more the type of stuff that it's what I look for in opportunity in mornings like this. Buying the premium to me is just you have to have another, 2% down day, I feel, to really get paid off on those. So I'm not going to chase it to the short side. I'm going to try to absorb some of the selling. That's one of the safer ways I know to do it. But I'll just say again that I have to wait and you get your levels lined up. You see the opportunity. But first, really it's this for me. That's one of the most fickle signals that I follow, which is to say it can go back and forth on a choppy day. But when it stays oriented in one direction, that is where the pressure is. And then the same thing can be said for this NASDAQ 700 tick. Now, it did get a little wiggle right there, and we'll see if it turns into more. But for the most part, that's what I'm looking to say, are real buyers going to come in? Is there enough of a shift in price itself to tell me to come in and buy something? And right now, there just is not. So let's keep working through it. Like I said, going to nibble on a little bit of Ethereum, starting to sell some premium at the, on the shorter dated stuff in an effort to pay for our longer dated position. And all of that works off of the backbone of looking for a tag of the fire line. So just coming back for a real quick revisit of this before we look at the rest of our positions. You'll remember we started this idea off of the squeeze. That was really not an easy squeeze for reasons that we have discussed. But I am still looking right up here. Give me into the end of the year. And that's my outlook on it. That's what I'm doing, again, with my own money. It's been a tough couple of sessions for it. So I'm not going to try to sugarcoat that. But I'm also going to try to start doing more, I guess, both sides. We're calling tops. Would have been a fun place to be short last Friday. But then also looking for spots to try to get in near the low, to get in when something is a little bit cheaper. Again, using that upper fire line as my primary magnet. From there, we jumped back to Google. Like I told you, Google to me is just, I don't mind the position we're in because of earnings on the horizon, but this is just one of those names that, generally speaking, has very small daily ranges. So Friday and Monday, yeah, those had some pretty good movement. Ranges expanded there a little bit. But otherwise, you kind of look at Google, it is just a little more than 1% today, but it's also because it closed really well yesterday. But I just look at that and think nothing has changed. There's no real opportunity to do anything fresh. So I'm just going to hold tight in it as this does turn into a little bit bigger route here, guys. So futures now flushing into the double O. I don't know where this thing bottoms at this point. I've given you the zones that I thought were the most relevant, the zones where I was going to be able to step in, and they may still actually end up being okay, but not right now. right? At this, usually if this is the way it's trading, I like to wait until the top of the hour. Now, of course, we've got a lot less data with the government shutdown, but the top of the hour can route a lot of this. And just watch, just kind of wait and see here, because there may not be something I can jump out and do, but get down into that at either the top of the hour or the 1 hour mark. Otherwise, like I said, it's just a really tough spot to say, hey, let's get short here, as so much of the market is just getting nuked. But I'm going to hold on with Google. Like I said, my plan there. And then for Uber, it's kind of moving with the rest of the market. Last week, it got really sold off from 100, and there's not really too much else to report there. So that's what I've got going on as far as those positions are concerned. This is also a morning where this workspace can be helpful. It could be more helpful if the put call ratio was at 1.0. If the put call got to 1.0 or 1.2, well, then you just watch these, because they all start to shift, just like if you were reading a book. You start on the left and proceed over to the right, and this takes the most sensitive time frame with the most sensitive settings. That's also where I'm telling you, you can expect these to be noisy, but when they're not, when they stay red, well, you just know the bears are in control. And again, this is what I'll just watch on days like today, because if and when there's going to be a buy to be had, this will help us find it. It will not get us in at the low, right? Because right now, this upper left-hand chart would need to rally about 15 points before really shifting that ATR. So again, you're not going to be buying it at the best possible price. And I know I've given you a few zones that were broken this morning, but all this is, in my humble opinion, right now, is now flushing the overnight low in futures, testing the 6,600 in that product. And now we start trying to find a little bit more stuff to buy. Like I said, I don't really know that I'm going to be doing it in the more esoteric names like Uber. DoorDash is a little bit better quality, I think. But I will look to stuff like NVIDIA. NVIDIA is now down here into 180. Let's check our strikes here and make sure I've got everything up to date. As far as where those levels lie, so like I said, I've got this where I can either show it to you through Spot Gamma, or you just at least know what my resource is. And right now, the only thing we've got is the key gamma strike at 180. The put wall is actually down here at 160. That strikes me as a little bit drastic, but it also tells me that there's not a lot of reasons to rush this just yet. If the put wall was also 180, well, then I'd be saying, let's watch NVIDIA to recover that tree line and maybe sell the $180 put. Since that's not really the way that thing is forming, it just forces a little bit more patience. If you remember Amazon, which I'll look at next, but there was a big, long conversation that we had about support at 220. It was good for, a week, 10 days. I want to lean that same way here for NVIDIA 180, but, just keep that in the back of your mind. We'll come back to it and see if it ends up being more relevant. Amazon now taking out that 220. So I don't know. It's just a market that continues to have charts that break, bigger spots of selling off. This all through here is where I was telling you that I thought it was very tough to short. And, you see how the market is just so good at kind of right when it looks its worst. Anybody that had those 220 puts in the short duration, they get crushed. And that's all that rally does, is crush out all that short-term premium. At the time, there was an important strike there. And of course, once they all dissolve, then it goes on to break as it's, kind of wanted to anyway. But there are our first signs of any kind of relief in this thing. Like I said, we'll watch this 1 minute chart and see if it starts to shift better. As much as I'm really not loving the idea of buying premium here, I don't know. It kind of seems like the place to take a shot. These kinds of ideas are not necessarily going to be low risk. Buying a call option, an SPY, I'd like to have two of them. And at that point, you have a little bit easier job of scalping one and then ideally getting that other one to run. Right here, looking at the Delta 70s, are going to land you about the 652. It's just, if this thing rolls back over and makes a new low on the day, those are going to get hit pretty hard. So, what do? You allow your signals to tell you what to do. And for me, that's going to be that ATR, which we've discussed quite a bit this morning. And it's also going to be closes above the high of the low bar. All right, this one's kind of sloppy because, it did break the first one in a big way, but this was still the second area, right? That's created by a voodoo mogul, and the key gamma strike that's technically 50, their script is plotting it at 53. But this is how, when I see a lot of these arrows like all over on my chart, I might be ignoring them because I don't trade these unless you have tested a key zone. So SPX is testing that zone and giving you a 2-minute trigger. From there, you can start to watch the S&P ATR trailing stops, and then that's what kind of helped confirm all of this. I don't mind day trading this with you guys. I just have to point out that again, when ranges increase like this, your risk is increased. So cutting back position size, making sure that it's not a nerve-wracking kind of deal. Let's make sure that we're putting that front and center. And also just say, like, look, that's the way I track it. That's the way I try to do my best to not catch too dangerous of a falling knife. But the combination of them is most helpful. Like, just trading that blue arrow is going to give you more stopped opportunities. But if you look at that and say, okay, can that roll over into these other methods of study? Not only do you have the area in cash that I was telling you about, but this is just enough in the futures to wipe out the overnight low. And now we see if a little bit more strength can come through. It is a tough argument to make. It's really not like, you got put call ratio at 1.1. I buy this blindly and I don't worry about it. I think that makes for an easy decision. But when the put call is still so complacent, that tells us with some assumptions that retail is coming in and buying calls. If there's just a bunch of calls being bought, that's kind of where you're going to see that ratio. When puts really start to be you see this in the most panicked markets, that will be much more elevated. So we are walking the tightrope here this morning as the VIX remains elevated, now up some 18 handles. Again, I tell you, I feel some kind of way about this because I'm like, man, I should have had something to benefit off the rise in implied volatility. But at the same time, this signal took months, right? So if I'm having this argument of like, look, the VIX is in a squeeze, I need to hedge. How long does that just, do you lose that hedge week after week after week? So I don't know. Again, just kind of going through a little bit of what I've been studying for myself, considerations for my own trading. And that's kind of what I got this morning, is still nothing on this finding a bid. Apple is down some 1%, trading 245, but not constructive. Again, I gave you 180 in NVIDIA, and it's attempting a bounce here. Becomes a lot less technical when a tweet drives everything. Taking a look at Netflix. Gosh, still kind of wish I had the short straddle for this one. And amazing to think about how the market has been so volatile, but we started the neutral conversation on Netflix right back in here. It got everybody nice and stressed out down here. And then here we are 2 weeks later, right at 1200. Sometimes I'm reminded of how the market was here before I was born, and it will be here after I am gone. So really, I think that thought just helps you be patient, and it just helps you remind you that the market isn't going anywhere. It will always be here. So just try to find a spot to let your strategy play out. And if you've got a delta neutral idea, it's not going to sit right at your strike for a week. It's going to test ranges. It's going to do whatever it is. But I told you, I thought Netflix is a good fundamental pick. And that may be tough at current valuations, but I have my reasons. And I think those reasons were helpful right through here. So like I do with you, I just cover my narrative, my thought process from one decision to the next. If that held, and then the 3-day squeeze is the next big signal in Netflix, well, then this is all stuff that we want to be buying. I mean, look at that squeeze right there. A 3-day is going to take a while to play out. But if that is going to resolve in the direction of the prevailing trend, I think we're having that conversation up there at 1400. And as I try to get through those with you, you can see how this is moving a little fast. Now, our blue arrow, if you want to take those as your triggers and just run a stop at the low of the day, you can do that too. Like I said, that'll help get you in closer to the low, where the shift of the ATR is usually a little bit better. It's going to take longer to confirm, but ideally you're going to have less failed triggers. Now, again, I hesitate to do this with you this morning because that could trigger and then we could go right back into being sold off. These options have rallied, what, about 60 cents from where I first looked at them with you. But I think this is where we want to be pursuing this. And I think that this is where, again, having a couple of them, let's try two of them at 5 and just give it a little bit of room. Even now, man, you got good liquidity in SPY. I'm going to try. I bid them 5. They already jumped to 5 and a dime. And I got my 5. So that's $1,000 of risk. And now let's sit here and see if we can walk through a little bit more of this setup. It begins with the blue arrow triggering against that zone. That's why, like in the first bit of our conversation, my zones broke, but they did not give that blue arrow. So that's, because you're in higher volatility environments, we're all going to have all kinds of stuff that breaks. You have to find one that's tested and respected enough that price shifts. Okay, so that shifted there from that first, and now on the 1 minute S&P ATR trailing. I'm going to omit my labels for just a minute and try to talk through it with you guys. But this is where, if you want to be real twitchy about it, you can now jump over to this NASDAQ. And you say, well, aren't we trading SPY? Yes, but at this point, that S&P chart is not going to shift until about 20 points under us. And that's just a lot of wiggle room, right? But if you're going to have pure momentum, and like the stuff I enjoy watching Cody do, I know he has methods with his, but it's where it's like you're just trying to not let it get away from you, and you're trying to do like the smallest frame of day trading that I think anybody really wants to do. It's not for everybody. And a lot of times it is more work. But if that's what you're wanting to do on mornings like today, you can watch that 700 tick of the NASDAQ. As long as that remains blue, I try to think of blue for bullish, although I guess bearish starts with a B too. But everybody knows red usually is being bearish, and being colorblind, these are two that stand out for me very plainly. So when people ask, like, why do you color stuff like that? That's why. But let's just give it a minute here. Let's also kind of watch the ticks. They've been neutral so far. Hero readings, nothing jumping out at me just yet. Kind of looks a little bit, it's sold off with everything else. Sometimes I feel like this moves just like the S&P. Sometimes it will give you a heads up. Look at that big standout strike. That is 65.45, and we traded as low as 55. So you were about 10 handles above that massive positive gamma strike. That helps the analysis. That comes in after having taken that trade with you guys, but let's just let it kind of keep trucking here. The other thing you can do once you've got something like this queued up is copy the option itself and go over and spawn a new chart. Put the option itself in the chart and then enable active trader. So once you've done all of this, you can see where our entry is. That's where you're going to have the little arrows that are next to price. So that's your entry. Up here in the top kind of middle left is your quantity, and then you can drop this down and work in and out of them this way also. And this is handy when you've got multiple contracts, and also if you're just really keeping a direct view on price, right? So right now we're bid 560, offered about 570. We can watch that NASDAQ right there. We can also get an order working to say, look, all these technical ways of trying to let the market give you as much as it has is great. But if you also want to say, look, if I can take $1 out of that first contract, I'm going to call it good enough. That's a fine place to have it working. You see how the shading stops at 692, 592. That lets you know that that is the best price that contract is traded today. And that's another way to think about targets. So I liked 6, but if I could sell one at 592, I'm going to have it out there waiting. Ideally, we don't have to make too many decisions back under 5. This may end up being all for naught if we can't get a little more out of it. Again, my zone of support was hit and held. That triggered, but then the first that we were covering as support today is now acting as resistance. So if nothing else, it's just those two red rectangles. Those are the zones that we're working through here. And we'll see if this is enough to give us a little bit of a payday this morning. There's going to be days in trading where it's just so easy to make money. And then there's going to be days where you feel like you're fighting tooth and nail to make 70 cents or less. This strikes me a little bit like the latter, But, calm seas don't make sailors. Let's see what it wants to give us here. NASDAQ trying to get a little lift off that. Like I said, Trace didn't do a lot for me so far. The strike did. And I think knowing that that strike was important has helped us a little bit. What you want to see now is that Hero makes a new best read of the day. So essentially, can that line chart make a new high? Well, then that's where we might be able to get a little something done with our runner. But with those being 0 day, you just have so little wiggle room. And then if this feels too twitchy, I get it, because I feel twitchy doing it, because I prefer weekly and 3-day squeezes. But right now, that's not so much the environment. If you wanted to play the Amazon or the NVIDIA 3-day squeezes and be buying options, buying calls out into next year, I think that's a play. If you want to be a little bit more, or attempt to be more in tune with what's happening every day, then this is how you do it. And, like I said, I'll catch up on your questions as I can. I sometimes find myself distracted through questions. And it's like, I want to be interactive with you guys and I want to see what you're trading and find other good symbols. But if you've got something like this going on, you just, I don't want to let it get away from me too much. I wish it would have popped up there and grabbed our 6, but, it just needs a little bit better print. If we make a new high on the day, I bet it will get filled. Again, with the extreme liquidity in SPY, maybe that will help. Tesla's still floundering at 420. Apple below the tree line and below 250. NVIDIA 180, that's still an important spot to watch. You can bring that down into really small time frame charts. If it remains weak, S&P is probably going to struggle. If it can get above 180, 172, I think it's going to be a little easier. Advanced decline, pretty nice pattern there. This is one more thing you can watch from a day trading perspective. It's kind of scrunched in there. I might have to redesign this to give it a little more breathing room. But you see how the 3-minute of the advanced decline is higher highs and higher lows perfectly? I mean, it looks just like a staircase. And as long as you keep that staircase pattern in advanced decline, I would be looking for magnetic action towards 0, right? 0 is where the two of those reach parity. When, selling is equal to buying, that's kind of where you'll see that in the advancers versus decliners. And it is often a decision. So I'm going to watch it there. Hold on loosely just a little bit longer. Breadth labels have cleared up some. What was a 5-to-1 in the NYSE is now almost 2-to-1. So it's still bearish being down these some 60 handles. And like I said, I may have to scalp something like 60 cents out of this one. NASDAQ 700 tick and a fresh squeeze. Looking at a 700 tick chart and a squeeze is something I never thought would come out of my mouth. I followed a lot of it when I very first met him. I mean, he did a lot of this stuff. So I don't feel like you're totally off base in doing it, but it's super small time frames. Ideally, that can get a little bit more oomph behind it. Options are still up about 50 cents, depending on where you got them. You can feel everybody making the same decisions we are, kind of, to some degree, right? It's just there's going to be a part of this bounce that's, dare I say, easy. That's what we identified at the low, and that's what we're going bid off of. It's the continuation that gets tough. It's like, are you really going to come back and try to fill the gap today? Well, then let's get on with it, right? Very timid so far. But I am keeping a distant eye there on the NASDAQ. Again, you can see that pullback. I'm not telling you this ATR concept will remove every bit of anxiety in day trading futures, but I will tell you it gives you an objective way of looking at stuff. Again, I think that chart is generally too wiggly for most, but you see how it's like, all right, it's going to pull back, comes right into it, tried to hold, could still break this morning. Again, it's like I said, it's pretty small. It's just trying to stay in tune with the modest lift here. Hero got that bounce, nice little V-shaped bottom, but then stops. They need to get a little bit better performance out of that to keep those short-term option flows going. And unfortunately, I can't prop up the whole market by myself. So if you guys wanted to get in there and help, maybe buy a little something, got anybody on a desk that can give us some lift? But it's good seeing you. Like I said, Bruce 007, great having you all with us for the open today. It's a little bit different than I had planned on, but still a privilege to be here with you. I hope you're getting something out of my method of day trading. Advanced decline. See how it sounds like you can kind of move that chart just a little bit to just stay right there in sync with that stair-stepping 3 minute. 1 minute, generally too noisy. 5 minute, a little bit too slow. So I thought 3 is just kind of clean for that. And, so far so good. See if I can find my active trader window here. All right, so the first scalp is completed. And like I said, I'm not trying to shoot for home runs here, but it's just this kind of environment where it's like, I always hated being in these spots and doing nothing. Like, look, guys, I'm just gonna wait for more clarity, and that's okay. Some days I will. Some days it'll just be a different vibe. Today we broke my first zone, but I didn't panic through that. Again, if you're super short term, maybe you catch the short in that. But these types of opens just aren't where I get short. I say, all right, that bowling ball may end up being a 13 pounder instead of a 9. It really stretched our trampoline. But again, notice how that one did not give a blue arrow. Arrows, squiggles, all kinds of stuff can populate in a nearly infinite number of ways on trading platforms. But this one is super basic. This is just looking at price. And you see how when price just keeps cascading lower, every bar has a lower high and a lower low. Well, there are no blue arrows. But as that gets stretched and finally comes to that point of bottoming, then that is, that pattern is what triggers that blue arrow. So it's super basic. It's super simple. It's not, that's the other thing about technical indicators. Some of them can get way complicated and a lot of code. That is just off price. It's about as easy as it gets. And now what you do with the second contract is basically just put a stop at 5. So we got them at 5 even. I guess it would have made my brain happier to sell that one at 6. You can see the price is kind of all over. We're now 627 by 640. But anytime we're doing any kind of trading, I want you guys to get better entries and better exits. I don't know if you could have got a better entry. Right about when I jumped on it is when it started going. Maybe a few pennies, maybe. But even if you had to pay 510, 520, now offer out half of your position, because this is another thing that is so painfully obvious, but took longer for me to realize than I care to admit. But by taking profits, you also get risk off the table. I've just always been so comfortable with risk. And like, all right, I put $1,000 in here. Let's see what it can do. But by taking the one off and you say, oh, you only made 90 cents. Yeah, that's not a huge trade, but I took $590 off the table, right? All of that could have gone wrong with that. And that's also what enables bigger trading. You got to be careful, especially when markets are volatile. But if, say if you're trading 10 lots and you say, all right, I'm going to go ahead and do 25 on this next position, got to be careful. And remember that one trade is just in a series of 25 and track and monitor them that way. But as you get better and as your account grows and as you're constantly pushing yourself, you double and triple that size, and then you take off a third when it's up 60 cents or when it's up 90 cents. And then you start to realize how that is what the biggest money in the world is doing, right? There's some investment, there's some long-term trading going on. But when John mentioned in a webinar, it's been years ago now, but he said the longest or the average holding time for a stock was 1 second. And I'm just like, what are you talking about? Like, that seems wild to me. But then once you think about the volume and type of liquidity and stuff like SPY, it's all of these between algorithms, just the biggest money in the world, fighting over pennies all day long. So I don't know, just when I really started thinking about all of that and trying to trade bigger, and I don't know, this has just been part of my journey. I hope you guys enjoyed the commentary as we work through it. I'm bad at the mindset of taking the second one off, because what a really good market student would do here is walk away and just set the stop at break even and be okay with it, because today has that kind of potential. When you say, oh, you think it's going to go up and fill the gap? I have absolutely no idea. But if it did, wouldn't it be nice to have some exposure to? you're now in a position where, unless you mismanage it, you're not going to take a loss. Again, I'd hate to get out of this thing back at 520 or 5 and a dime. That's why I'm telling you, I'm kind of leaning towards just booking it because that's not a bad little day trade. But if you take that off here at $1, it reminds me of AMD. You guys remember trading AMD together, where I went from like 5 to 8.5, and then it went on to close the day at 20. That's just more of this lesson where I look, if you want to take it off at 8 and call it good, there's really nothing wrong with that. But on that day that it goes to 20, you just try to let the market give you what it wants to. And, that's kind of, again, where I'm at today. I appreciate it, Cody. Thank you for the assist on that. Caesar and John, happy Tuesday. Like I said, a pleasure to be here with you. I know the schedule is a little flexible, but I think that's kind of how life is sometimes. So I appreciate y'all working with me through it. Advanced decline, still holding on. Okay, but, this little 700 tick of the NASDAQ is being tested again. You see also why this is so good for trending days, because it moves up with price. So when we were talking about our first decision, because we bought it, it's like, all right, then it pulls back. It holds that pullback, so we weather the storm through that little wiggle. Then when it makes the new high, that level moves up. So you're not having to risk back what you were originally. You're ideally, like say this holds again, and then you crest back up above these levels. Well, then your stop moves up once again, and you just keep on doing that, until it finally changes. That's kind of a big part of what was discussed in, The Best Loser Wins. He talks about how he just really tries to let, when people give you targets and all of that, it's like, okay, that's like trading 101. Like, what's your target? But then as you get more advanced, you say, target is open. David does this a lot with his futures trades. He'll try to nibble out of that first little piece, and then you see if you can grab one that'll run. And then when you do, those are the ones that, like our gold trade. Think about how far that thing ran. You just need a couple of those a year to really make a significant difference in your account. That gold option, we were long the $300 call. So talk about, not trying to have remorse for this stuff. That'd be, trading for $80. That was, and I didn't get all of it. I show you how I try to dedicate myself to trend following, whether it's a 700 tick chart of the NASDAQ or a 3-day chart of gold. It's all just saying which way is the current moving, and can I open my wings and glide on that a little bit? There's also why you don't have to be terribly intelligent to be a good trader. Sometimes the smartest people I know have the toughest time with it. It's like really all you got to do is identify support and resistance, try to find a short-term way to stay synced up with it, and let the market do the rest. But this is like I said, guys, I'm trying to give you my methods on following along and keeping this, within the trend of this bounce. When the ticks go neutral, it all kind of starts flattening out. I may not be able to ride this thing all day. Options are trading for about 6. I trust that everyone is taking off at least half. What a wicked candle that is. Yikes. From 20 down to $3.50. Tesla's stubbornly trying to get back up above 420. Elon doing the best he can to put a bottom in that down there. Kind of fascinating the way he's manipulated that stock to create these meme-based, not quite like Roaring Kitty. I guess he did it in a little bit different way. But, it's like you can't say it's not manipulation because it is, but it's still totally legal, right? I mean, it's not like it's any big secret. But 420 is our key gamma strike. The tree line is 419, and Tesla is trying to fight the good fight. S&P is getting a tiny bid. Check out that NASDAQ 700 tick. Like I've told you, it's not going to take the anxiety out. Eventually, you get better at it and you're not as anxious, but it will not stop the market from pulling back. But it'll just give you a way to say, if it's not going to pull back, let's just kind of hang out. And if it does, again, a very clear way of getting out. If it would do a little bit better here, this tail would curl up again. And just like it did here, it would do here, and we just keep on moving that up. That's, again, the most fickle, the most sensitive, but you can follow that as you try to guide the S&P into your targets. I kind of feel like, look at that in the futures. I've got a level there at 47, and it's turning down just a touch from there. We have 15 minutes into the bottom of the hour. Should have done 100. And AB, I was thinking about the question you asked me yesterday about how do you change when the market changes. And when you go from this, climbing the wall of worry every single day to the big volatile breaks. And I told you, calling that top, I think you got to be very careful with, because people that told you that they caught the top in SPY, you just, I would always just ask the question, how many times did you try? Because if that was your first time to try it, well, good job. That's pretty awesome. But if you've been trying to short it all through here and you finally catch it, that's not the way to do it, in my humble opinion. But the comment I was going to make for you is that when you do finally see that breaks, just go back to day trading more, where it's like, all right, maybe I didn't pick the perfect moment of when that squeeze in the VIX was going to fire, when all of that was going to change. The toughest part about that is it wasn't a witching expiration. It wasn't Powell taking the stage. It wasn't anything about interest rates. It was simply the president making a tweet. And I think that's tough. That's tough for me. Again, just telling you straight up, like when you've got economic stuff on the calendar, you can be aware of that. And you can be aware, like, hey, this could be a market moving event. I am not on Trump's SMS list. So that's just kind of how it goes. Secretary make a couple of bucks this morning, Steve? I hope so. I think, like I said, I'm about to be ready to throw in the towel on this idea. It may keep going, but I see that level in futures at 47. You're getting some resistance there. Best price of the session so far was 675. All of this decision just keeps coming back to, how do you feel when you're in this situation? And if it goes back to 5, Barry Greenstein wrote in his book Ace on the River that his ex-wife would always be in his, like, he'd buy into a poker game with $5,000, run it up to $25,000, and come back home with 18,000. And she would be like, well, you lost $7,000. And he's like, well, that's why she's my ex-wife. But I always thought that was a funny story because he's an excellent poker player. But when you understand that story, you now understand, are you judging yourself by your high watermark? If you do that, well, then, yeah, get out here, because these are high water marks. If you look at it and say, look, it goes from 5 to 7, but I can get out at 6 and be okay, well, then you can try to push for 8 or 9 or whatever the market's willing to give. And it's working hard. It's trying to get through that 47. Tick's acting okay. Advanced decline as pretty as a picture. And this is why there are times where it's like we're going to be running the market internals, and I'll tell you, it may not speak to me. Like, I don't see anything in the static. But then there will be other times where this one, on the time frame I tell you I like, it could not be better. I don't know if I'd want to climb that staircase. I mean, it does look a little uneven if we consider a perfect staircase, but you get what I'm saying. The fact that it's so elevated is a testament to the strength. I just saw that analogy the first time as I was drawing it out for you, because if it were a perfect staircase, the advances would be smaller. But the fact that the staircase is so steep shows us the advanced decline rapidly increasing. Now, again, that's a very fickle signal, and I told you, follow that one time framing into 0. Once you hit 0, that's a decision, because if bears are about to step back in, they'll do it at the 0 line, or that's one very typical spot. If bulls are going to have more of a say in it, then the one time framing continues, you push up into positive values, and then we just see. But I don't know. Again, I'm kind of leaning on getting out of this. I'm going to offer it out at 7. That'll be a little $3 day trade. It's not going to be life-changing, but 3 points is 3 points. And if nothing else, it gives you my best view of day trading a volatile open. Might have to nibble it down. See, right now we're bid 680. Again, I'm offering 7. Also a really easy way of understanding a market. Like if you're brand new to trading and it takes a minute to learn the bid ask because we grow up, going to the grocery store or even buying something on Amazon, whatever it is, the gallon of milk is $7, whatever it is. You don't get to haggle over price. Price is set and that's what you pay. The market, there is haggling, right? Right now they're willing to pay 680 for the option, but I want to sell it at 7. So you just kind of offer it out there. And I just think if we can get one more little goose, get the advanced decline to 0, maybe one more plus 1,000 tick reading, and then I'm going to cash it out. If you decide to stick with it, my methods, all the stuff that I'm watching to say, look, this may have more to give. But I also find, I gave you guys that Mark Douglas lecture. That's that 4-part series off of YouTube. And he was talking about how this guy, like one of the biggest bond traders he had ever worked to help, would do so well in the morning. And then as he continued to try to push his luck throughout the day, would inevitably give it back. And that's another method of saying, all right, maybe this thing just keeps on going. But if I can make a decent chunk of money in the open and then leave it be, walk away and just say, I don't care what happens from here because you've locked up what you're trying to do. I don't know. That conversation really resonated with me as well. So many things in trading are a perfect balance, not of opposites, but of these direct ways of thinking, right? Where like, look, if you can make 1% and that's all you're going to do, great. Be good with that. But if you want to say, look, the market has 5% to give me today, there's no right or wrong answer to it. It's just ways of thinking, and man, nice little bid there. So I wanted to be wrapped up with that with you guys just because I thought that'd be a good way to conclude my day trading for the open with those thoughts on monetary targets, all that good stuff. Also was saying, look, I'm targeting advanced decline into 0. When these kinds of things, when those kinds of targets are hit, if you don't honor them in some way, I just always feel that much worse when I give it back. Where I'm like, look, that's the part that I thought I saw. Gosh, if that ATR keeps you in the game all day, awesome. I hope you picked up a helpful tactic. But anyway, I'm done with that little idea. I'm glad we didn't get short at the lows. If you were super nimble and you caught the break of the 00 into 50, I mean, again, the low of that move was 55. So there was a solid 45 points that thing fell. But that's just so like shorted through futures and run a trailing stop, within a couple of ticks. And most of the time it's going to stop you out. I'm just saying I cannot get short on that type of velocity down. But eventually that bowling ball is going to bounce, and that's where I try to get involved. I'm going to be a little bit remorseful if we hit this 60 and didn't have that SPX vertical on. I sometimes hesitate on these when doing them in the room because they look kind of scary. Dare I say they even look a little bit foolish, where you're like, gosh, we're trading down here at, or like say I put it on right here, just at the open, telling you I think we target the snow line. Well, anyone that's new to this strategy or has maybe a little bit too much anxiety is going to be freaking out when you get that drop, right? Because that short put is going to be so deep in the money. But remember that there's no early exercise. There's no exercise of any kind as it settles to cash. So if you do a 30 wide put credit spread and you take in a $23 credit, again, it's counterintuitive because a lot of us grew up selling at the money or out of the money premium. Well, by selling deep in the money, yeah, there will be those times where you may lose the $6 or $7. But what about when that voodoo line does turn into a magnet and you end up making $13 or $14 on it? Or if the day really is strong and you take in the full premium. That's why I like them. I don't know if we're going to get all the way there, but we did get 66.10. And at this point, that is all close enough. I'm going to take a screenshot of this guy. Because like I tell you, there's going to be mornings where this stuff just doesn't stand out. There's not going to be anything to talk about it. Then there's going to be other mornings where that's the image that needs to go in the book. Whatever is the next book that comes out, or, if you guys want to understand the trading stuff that I have learned, that's an image you would want as your advanced decline example. So I am going to give this one a quick label, advanced decline, stair-stepping into zero. I think stair stepping is 2 words. And that's the kind of stuff where, like, I do help by calling this after the fact. Like, if it just keeps pushing, I'm not necessarily saying this is a short, but what about when you look at this in the next hour, the next 90 minutes, and advanced declines back down here at negative 800? You'll say, wow, that was right on the money. And again, why is that? Because advancers reach parity with decliners. And if at the heart of the day things are more bearish, well, then when you reach parity, that's where bears need to take back over. If anything, it's about to break the one time framing. See how you get up into zero? You trade equidistant bars. And now, when this 3-minute closes, that would be your sell signal. Notice how this pattern did not show up at all throughout our morning conversation, right? It's a very different pattern. And that's why I think, again, you don't have to be super intelligent to get good at trading. You just have to understand like a few internals, a few ways of understanding what pattern is showing you. That's pretty sweet in the advanced decline, but everything else is still just ripping, guys. So again, trailing stop may have been a little bit better. When I do find myself in the spot where I've got directional calls that are making money, I also could have shown you a trailing stop where you say, all right, it's trading 7. I'm going to run a $1 trailing stop. That would have been good execution here too. But like I said, that's kind of where I'm at, and the best that I've got of trying to make a run at it with you. Awesome 007. I figured you would making some money on that this morning. And like I said, I always appreciate those of you that embrace the strategies that I've shared. I should have taken it, because that would have been a really good credit. We did it, a couple weeks ago and had that work out. It's just, when it's so far deep in the money, it can really feel like you're not going to get back up there. But in the right environment, those can be a real money-making deal. But I've got a couple more here for you. Let's take a look at ALAB. Getting trounced today. That's not a very favorable pattern. ALAB is on that list that Ophir is maintaining, right? Some of the best fundamental picks that I follow come from that list. But I really think if you're going to be the very best trader you possibly can be, you marry different styles. Because you don't look, and this is just for me, because I've had like Pinterest was a killer trade in whatever year that was. And then I gave too much of it back. And then when it gets removed from the list, it's like, that's kind of a tough spot to be. But the point I want to get across to you here, and if you are long-term investing in this, I guess you just continue to hold it. But you marry ideas, like for me, it's that list of fundamental picks from him, and then trading it technically, as John might, through a squeeze. I'll tell you, I will never forget. It was I was just getting to know John, and I was like, what's your list of fundamental stocks? Like, what's the stuff that you hold long term? And he kind of just looked at me, and he was like, I don't remember the exact answer, but the gist of it was that he doesn't do any of that. Sure, we all have IRAs and retirement, and then there are certain things. But what I took from that, just even that moment of silence, is that he trades, that he finds stuff like this squeeze in a fundamental pick, and then you try to ride that for as much as you can. But I don't want ALAB shares. I don't even really want Tesla shares. I want US currency. And the more that you can use these derivatives to trade them for US currency, that's what you do. So that may not be the conversation you asked me for on this, but it's just saying, because we traded this one and we made good money on it, but just holding shares long-term for me has just been so tough. I like holding gold, land, and cryptocurrency, but I don't hold anything in the way of long-term share positions. Like I said, I've got some Tesla that's, just as much fun as I can handle today, but it is shares. Again, I'm going to see it through. I'm going to be in it when it makes a new lifetime high. But just think about stuff like this. And I guess in closing, to say, this is the setup. That is the trade of finding a great stock and finding a moment in time when it is ready to run. And that's where with leveraged derivatives, like options, like out of the money options, you can make a ton of money. But then the art of trading comes in keeping it. Paying short-term capital gains on everything you trade, it almost kills me some days. I am still working on figuring that out. And you'd think as many tax resources as we have, I would be better about it. But I've been going through what I'm going to have to do for last year. And it's tough. No, it's super tough, Jim. And I've been thinking about would there be benefit in just trading SPX, because I know there are some tax advantages there. But no, that never gets fun. And some people say, well, if you've got that problem, it means you're making money. They take almost half. So on what world do we get to work this hard to make money and then IRS just takes half? It seems like a lot to me, but I guess everybody's going to have their own opinion in that. S&P running this morning, guys. Like I said, if you got a little bit more of a runner, that 700 tick of the NASDAQ ATR trailing stop, that's another one that's as pretty as they get. Maybe I'll take an image of that for today's updates, but I do think that's where I will wrap up things with you. I hope you found it a helpful review of a volatile open and were able to make a couple of bucks in it.